So this webinar is being recorded. And with that being said, I'm going to be sending out a link to the recording and also the slides, hopefully by the end of the week, beginning of next week. Okay, so again, we have a good amount on the meeting today, but I wanted to welcome you to this is our third annual virtual home buying webinar, actually semi-annual. So we try to do these in the spring and also in the fall because times are always changing. So this is a very timely webinar today, especially with the last few years that we've had. So, wanted to let you know a little bit about your credit union. We're here for the community, and we're so happy that you've joined us today. And I want to thank our members for your membership and your loyalty towards the credit union. So with that being said, some housekeeping here. So like I said, we are going to be recording the webinar, and I'll be sending out that link in the follow-up email. And then we're going to ask that you submit general questions for the Q&A has been turned on, the chat has been turned off, but we'll be able to answer some of the general questions that you might have throughout the presentation. And then also, because we're chock full of information today, so we want to make sure that we're able to give our presenters enough time. So, hopefully we'll be able to entertain a lot of the questions that you may have, but if not, you'll be able to email specifically each presenter, and we're also going to give you that information. So it might be a good idea for you to take a screenshot or a picture of this slide. At the end of the presentation, you'll also have another slide with this information. But again, during the presentation, if you have questions that you don't want to include in the Q&A, you can email them directly to our presenters. So our presenters today, our expert presenters, are Betty Freert, and she's actually with the credit union, the AVP of real estate lending at JHFCU. We are so happy to have her, and she is a wealth of knowledge. And we also have Jeremy Hornberger with Work-Life Program Specialist at the JHU Benefits and Work-Life Office, and she is going to be speaking about the Live Near Your Work program. And then also Demetria Scott as well, and she is the associate broker and team lead at Long and Foster Real Estate. And you have all of their information on this slide here. So with that being said, I am going to turn it over to Betty.
All right, thank you all for coming. As Debbie said, we love to work with our members on mortgages. We're happy that you've signed up for this webinar, and please, I do encourage you that, if you want to discuss your situation in more detail, just shoot us an email. Either I or a member of my staff will get back to you, and we can kind of go into more detail about your specific situation. Because one of the things with mortgages is everybody's situation is a little bit different. And particularly if you're a first-time buyer, you want to take advantage of all the hand-holding you can get. Okay, so what I'm going to try to do during my portion of the presentation is just sort of hit the high points of the mortgage process so that you have a feeling for what to expect. Okay, so the first step, if you're thinking about buying a home, is to pre-qualify for that loan. Okay, the worst thing you can do is go out and look at houses and fall in love with one and then give us a call and we say, oh no, you can't afford that. It's better to get a realistic idea first before you start to shop. Now, people will ask, how far in advance should I do this? It all depends. If I kind of run through this presentation and you say to yourself, oh, well, my credit's good and I have plenty of money and, I really don't have much in the way of debts, well, then you might be able to do this pre-qualification very shortly before you start looking. But if there's something about your situation that concerns you, it's never a bad idea to talk to us, and we can kind of, look forward to what path you need to take to alleviate whatever that concern is and really put yourself on the road to homeownership. So when you should do this sort of depends on your situation. Okay. And with the pre-qualification, we're going to figure out what you can afford, what kind of loan seems to be most suited for you. Okay, and we'll talk a little bit more about loan types a little later. In the market these days, and Demetria will talk a lot more about the market, virtually all home sellers are going to want a pre-qualification or pre-approval, terms are kind of used interchangeably, letter submitted with your purchase offer to show that seller that, hey, you really can afford the house you're trying to buy. And the process really doesn't take too long. Typically, we'll spend about 15 minutes or so on the phone with you. We'll ask you to upload your pay stubs and W-2s and, saving statements if you have funds elsewhere than the credit union. Okay, we'll look at your credit, and then we'd be able to give you a pre-qualification letter saying, you qualify to buy a home for X amount. Right? All right, can you go to the next slide, Deb? Thanks. All right, so when we're looking at pre-qualifying you, okay, what are we going to look at? And there's an old term that you may have heard if you ever took any business classes that focused on personal finance, called the 3 C's of credit: capacity, collateral, and character. And those are the things that lenders are going to look at when evaluating not just a mortgage, but really any type of loan. So we're going to talk about each one of them and how they fit into the mortgage process. All right, so collateral. The first thing to think about is, what kind of home do you want to buy? Are you going to buy a 1-unit home that's in good condition? Are you thinking you might want to buy a 2-unit home and rent one of the units? Are you thinking you want to buy a home that's going to need some love to make it really livable? You sort of need to decide that up front, because the type of home you're buying is going to impact the loan program you need and what you may qualify for. For example, if you want to buy that fixer-upper, that's generally a specialized loan program, okay? I've had people before who were all over the place. They start off with, oh, I'm going to buy that 1-unit home that doesn't need any work. And then they'd see a house that needed a lot of work and they needed a special loan. And then they'd think about buying one that had an extra unit. You want to decide beforehand what you want and pretty much stick to it, because if I pre-qualify you to buy a 1-unit home in good condition, and then you go out and put a contract in on a 2-unit home, all of the rules for that change, okay? So you want to make sure that you're pre-qualified for the program you need and the type of home that you want to buy, okay? The other factor that comes into play is that there are different down payment requirements for these different loans. So again, we'll want to make sure that we know exactly what property type you're looking at before we proceed with the pre-qualification. All right, now we're going to talk about capacity, and there's 2 elements to this, okay? And the first one is basically, how much money do you have? Okay, when you buy a home, you're going to have to have a down payment. That's basically just the difference between the purchase price and the loan amount. If you buy a house for $350,000 and do a loan for $320,000, you've got a $30,000 down payment. The requirements for the down payment are going to vary based on the property type, as I said, the loan program, and sometimes the credit score. Sometimes if you have a lower credit score, the lender may be looking for you to put a little more down. But normally, the minimum amount for the down payment is going to be between 3 and 5% of the purchase price. The other thing that you're going to need money for at closing is closing costs. And those are the expenses of buying the property and getting the mortgage. The cost of the appraisal, the cost of the credit report, the cost of the title company's work to research the ownership of the property, the fees the city or county charges to record your mortgage, etc. Normally, those total about 4 to 5% of the purchase price, okay, depending on where you're buying and the purchase price amount, okay? And one of the things that a lender will do once you have a property identified is do something called a loan estimate that gives you a detailed breakdown of the estimated amount that you're going to need. So if you think you're going to be very tight on funds, you know, certainly with JHFCU, probably with other lenders as well, if you give us a property address and an anticipated purchase price, we can work up those numbers for you, just so that you have a little bit of an idea and more of a comfort level, okay? Now, this money can come from your own savings, of course. It can come from gifts from relatives, okay? Or it can come from grant programs, okay? Sellers can also contribute money towards your closing costs. And Demetria will touch on that in light of the current market. Okay, one thing I want to stress is gifts from relatives. Different relatives qualify based on the program you're using. So that's something that you'd want to discuss in more detail with a loan officer when you do the pre-qualification and you think you're going to get a gift. Is who is that gift coming from? Is it my mother? Is it my second cousin once removed? You know, we need to explore that for you. All right, the other part of capacity is how much monthly payment can you afford? Okay, so we're going to look at something called the debt to income ratio. The debt to income ratio is simply all of your monthly loan and credit card payments, and that also includes things like child support or alimony, plus the new mortgage payment, including property taxes and insurance, divided by your monthly before tax income, okay? This doesn't include things like utility bills, phone bills, that type of expense, all right? And generally, a loan with a debt to income ratio of up to 45% is readily approvable. Okay, some programs will let you go higher to 50% or even over 50%. But one thing I want to stress here is that everyone is different. And just because we tell you you can afford a payment does not necessarily mean that you're going to be comfortable with that payment. You know, I have one child who is very cheap and spends very little and could afford a much higher mortgage payment than my other child who loves to go shopping for very expensive clothes. You know, so my second child, even if I told both of them they qualified for the same amount, my second child would be short of cash every month. So just make sure that whatever we tell you, the number we're calculating is one that you really feel you can fit in your budget. You're the one who's going to have to make this payment. All right, now character. You know, this is a very sort of loosey-goosey thing. You know, here we're not talking about whether you help old ladies across the street and you're kind to children and puppies. We're talking about how likely is it that you're going to pay the mortgage back? We're going to give you all this money. Will you pay us? And the only way we have to evaluate that is by looking at your credit and your employment to see, what are the probabilities here? So credit, you know, obviously everybody knows what their credit score is. Normally 620 is a minimum credit score. That's what the credit union uses. But those scores are going to vary by the loan program and the lender, okay? And even though 620 is technically an acceptable score, you may not qualify for certain low down payment programs with a score that's approaching 620. Whereas with another loan type, you may readily qualify, okay? So if your credit is in the low to mid 600s, that may limit the programs available to you. It doesn't mean that you can't buy a home. It may mean that we need to look more towards the programs that officially cater to first-time buyers, okay? If you've had a bankruptcy, a short sale, a foreclosure in the past, you might have to wait a certain period of time before you can buy a home. And if you're in that situation, I'd encourage you to just email us directly, and we can talk a little bit more about what those waiting periods are, so we can make sure that we can help you out with that. Okay. The other thing we're going to look at is income. Okay. What a lender wants to see is that you've got a history of making this kind of money so that you can afford the payment. It doesn't necessarily mean you have to be with the same employer. Okay. Changing jobs is not a bad thing, particularly if you've changed jobs to earn more each time, which is what most people tend to do. However, if we see an applicant who worked somewhere for 3 months, quit, waited 3 months, got another job, worked there for 4 months, quit, had no income for a couple of months, got a new job, we're going to think, what's going to happen during those months where they're not working? Are they going to be able to afford the mortgage? Okay. Now, for some of you, you've recently graduated from some academic program, and I should add in here technical program too. Okay. If we can document that, oh, hey, you were in nursing school, you graduated, you passed your boards, you got a job. Maybe you've only been on that job for 3 months, but prior to that, you were acquiring those credentials, and that's going to make sense to JHFCU or to other mortgage lenders. The other thing we're going to look at is your income likely to continue for the next 3 years? So if your income is from standard employment, we all know that most of us are employed on what they call an at-will basis, and the employer could let us go at any time. But from a mortgage underwriting standpoint, we assume that a regular job, wage income, is going to continue for the next 3 years. But if your income is coming from something like a graduate stipend or a fellowship, those are some of the things that impact our members, that has a defined ending period, okay? And the lender may say to you, we need to see how long that's going to continue. And if it's going to end shortly, some lenders will have an issue with that. You may need to put more money down, you may need to fit into a separate type of program. So just be aware of that. If you're talking to the credit union or to any other lender, just make sure that we know how your income is structured. Okay. All right. And one other brief note. Okay. If you are here in the US on a J1 or F1 visa, the credit union is fine lending to you. Some other lenders will not. Okay. They will require an H1B visa in order to lend. So if this fits you and you're looking for a loan, if you're shopping around, one of the first things you want to do is ask about what visas are acceptable to that lender. All right. Now, we talked about capacity in terms of funds for down payment and closing. Okay. And one of the great things available is grants, which can come from a variety of sources. Jeremy's going to talk about the Live Near Your Work program through Hopkins, which is just an awesome program. I wanted to mention the Baltimore City grant programs. There's a variety of those. Some of them are income-based, some of them are not. If you're interested in pursuing those, you can basically start with a home counseling service. even if you look on the Live Near Your Work website, there's a listing of home counselors. Talking to any of them, doing one of their programs, they will help you identify grants that may apply to you, particularly if you're buying in Baltimore City. But then I wanted to specifically mention the community partners and first-time buyers grants that we work with here at the credit union. All right, so we partner with the Federal Home Loan Bank of Atlanta to offer these grants. And if you fit in their income buckets, they're really nice. Employees of hospitals and educational institutions qualify for what they call the Community Partners Grant, which is $15,000, so very helpful. If you don't qualify for that, but you're a first-time buyer, you could get a grant of $12,500 through this Federal Home Loan Bank First-Time Home Buyers Program. Okay, the nice thing about this is that it's not restricted to Baltimore City. You could be buying anywhere. Okay, you do have to fit into the income brackets that I've listed here. And this is based on your entire household, not necessarily, you know, everyone on the mortgage. So if you only have 2 people who are applying for the loan, but you have an adult child who lives with you who works, that adult child's income is going to be considered for the purpose of this program. So it tends to be a really nice program for single individuals or single parents with a number of children, you know. So we want to take a look at this for you and see if we can make this work. You do have to do special homeowner counseling, and there is a lien on your home for 5 years. After that 5-year period, though, it goes away and you don't have to repay any portion of this grant. All right. Now, just a brief plug for our programs, because we would love all of you to come to us to get a mortgage. We offer a variety of different loan programs, conventional, FHA, and VA. And let me just talk briefly about each one of those. Okay, with a conventional loan, there's a minimum down payment of 3%. Okay, it's typically more for folks who have higher credit scores and lower debt ratios. Right? If your credit score is, you know, certainly 700 or above, conventional would be a great way to go. Okay. FHA is their traditional first-time buyers program, tends to be more forgiving on credit score and also on debt ratios. If your credit score is in the 600s, we would want to compare FHA to conventional to see which one is better for you. Dimitri, I'm sure we'll talk a little bit more about this, but we've seen FHA contracts not being quite as popular with sellers as conventional, but you know, it's really an excellent program that's designed to help first-time buyers get into a home. And then also VA, we don't do very many of those, but if you are a veteran, you know, you would qualify for a VA loan, which would allow you to put 0% down. Okay, so a very helpful program there. Obviously, we talked about the community partners and first-time buyer grants. I think our rates are really good. Our fees are reasonable. You know, our minimum down payment, as I said, is 3%. And one of the things that I think is nice about our mortgage program is you deal with just one person from start to finish. Most mortgage companies will have someone take the application and you establish your relationship with them, but then, whoops, they hand you off to somebody else, and then it gets handed off to somebody else. And a little bit gets lost in that process, I think. So with us, you would deal with one person from the beginning to the end. And I think our members are really very satisfied with the level of service we provide. We get compliments all the time, thanks to my wonderful staff. All right, and just one last thing before I turn this over to Dimitri, and she tells you all about buying a home from a realtor perspective. A couple of things that you can do for yourself to keep the paperwork to a minimum and avoid nasty surprises in the mortgage process. Don't do anything without talking to your loan officer. Right before closing, we're going to verify employment. A lot of lenders will pull a new credit report. So don't change jobs, don't retire, don't buy a new car, without keeping your loan officer in the loop. If you do need to change jobs or buy a new car during the mortgage process, that's usually just fine if we know about it. But if we verify employment 2 days before closing and you don't work there anymore, then suddenly your closing isn't going to occur as scheduled. Okay, so just make sure your loan officer knows. Keep things the same as much as you can with wherever the money is for your down payment and closing costs. Every time there's a large deposit shown on the account statements that you provide to the lender, okay, and they're going to ask for 60 days worth, every large deposit, they're going to say, where did this come from? So then you provide 60 days statements for that account. And if there's a large deposit, we're going to say, where did that come from? So if you can keep things very boring, that will help in terms of cutting the paperwork down. All right. And finally, check messages and emails very frequently and respond quickly to requests for information. A lot of the mortgage process is time sensitive. So if you don't check your messages, you don't call the person you're working with back for 2-3 days, it's going to slow the process down and it's going to be more stressful for you, and may even cause your settlement to be delayed. So just make sure you're right on top of everything that's asked of you. And now I'm going to turn this over to Demetria, who just has a wealth of experience and will share lots of good knowledge.
Thank you so much, Betty. I really appreciate it. Can everyone hear me? Sounds good. All right. So my name is Demetria Scott. I'm an agent with Long and Foster Real Estate. I've had over 17 years of experience as a licensed real estate professional, and I specialize in working with first-time buyers. The thing I want to start off talking about is that your real estate agent is the one person on the team that knows a little bit about what everyone does in the process. So if you have a problem and you're not sure where to start, your real estate agent may be the person to go to ask, where should I begin? Who should I tell? And most of all, how do I begin the process after I've actually gotten pre-approved? Here are a few tips and tricks and things that you need to know about working with real estate agents and real estate licensees. So by law, if you don't have a written agreement with an agent, then that agent represents the seller. And that is the same whether you're purchasing a house in Maryland or the District of Columbia or Virginia, throughout the DMV area. When you first reach out to an agent and you see the agent is on the sign, or you meet an agent at an open house, that agent is representing the seller in all of those instances. Okay. The best way to establish a relationship with your own agent is to seek out an agent and get referrals from friends or family members or your credit union. And you need to start off with a buyer consultation. And let's go to the next slide, and I'll talk a little bit about what to expect from the buyer consultation. So during the consult, the agent will sit down with you for 30 minutes or 45 or an hour, however long you need to have your initial questions about the home buying process answered. They're going to review the basics of agent representation, the tip that I just told you, that if you don't have a written agreement with an agent, that agent is representing the seller. So it's going to be extremely difficult for you to get useful information about the property's pricing, whether or not it's good or overpriced, until you actually have an agent that is your advocate and who's working for you. They're going to review the basics of some of the processes that you may not know. If you intend to purchase new construction and you have an agent representing you, you should let your agent know what communities you're interested in, and that agent will register you there. If you don't, and you go to a community by yourself, the community may not agree to allow the agent to work with you or to advocate on your behalf because they consider you to be their customer and that they don't want to cooperate with an agent at the outset. One of the next things that you should know is the agent can help you with your individual timing and your planning process, as far as when should you start the whole process or get the ball rolling on your purchase process. If your lease is ending in August or September, you may want to start your search now, and especially if you're planning on using a grant. Grant program participants need to first go to an all-day counseling session or an 8-hour online counseling session, followed by a one-on-one where you have to produce your documents related to your purchase to get your certificate. That can take some time, especially in the spring market when everyone is kind of gearing up to purchase in the spring and the summer. If you're not planning on using grants, then you can start your purchase process maybe 3 or 4 months out from your intended lease date or move date. That is so that you can talk with your lender, you can get your timeline set up, and then you have yourself a good 6 weeks to 2 months to locate a home. Okay. The agent can also help you to balance that location, condition, price, and amenities in your home search. A lot of times when you are purchasing a home, you can only get 3 out of 4. That's been the biggest thing, whether my clients have had $80,000 or $800,000. No home is perfect and no home has exactly everything. So your agent can help you figure out maybe neighborhoods that you hadn't considered based upon what you're looking for and other options. A good agent during the consultation is going to ask you to do some things. For example, they may ask you to get pre-qualified. They may ask you to go ahead and get started and complete your home buyer counseling. Another thing that agents might also ask you to do, especially this time of year, is to file your taxes early, because that may play a role in your ability to get qualified and your ability to move forward with writing offers. And then last, your agent should be able to talk with you about the current market, what to expect from that market, and how best to proceed given your specific circumstances. So since we mentioned the market, on the next slide, I want to talk with you a little bit about the current DMV real estate market. So from those of you who've had friends and family members that recently purchased, one of the things that comes to mind is what's going on with the market. If you were purchasing 12 months ago, you may have heard nightmare stories about people having to offer huge amounts above list price, especially in the Montgomery County, PG County, and around the DC areas. If you have purchased in those areas or friends or family members, a lot of them were doing appraisal waivers. They were paying their own closing costs. They made multiple unsuccessful offers, or they had a situation or circumstance where they found a house, but then the seller actually wanted to stay for a month or two beyond the settlement date until they were able to locate a house. And sometimes they even wanted to stay for free. The good news is that the market this spring and this summer is slower paced. The interest rate increases have led to a lot of people moving more slowly in their choice of home and searching more slowly. Homes are on the market longer. Sellers are more willing to negotiate on price, and they're also more willing to negotiate on the amount of closing assistance that's being offered. And during the height of the market, it was really difficult to have sellers wait for some of the grants to be processed. All of that is much more easier to navigate and negotiate in this market. If you're a seller and you're thinking about selling your home in order to purchase, that's also a great opportunity in this market. It's still a seller's market. Even though the appreciation is not quite as sharp as it's been in the past, Maryland is still 120,000 housing units short. And for that reason, people are still able to get full price, if not more, for the houses that they're selling. Okay. Let's talk about the value of the agent when you're actually making the offer. So your agent is your advocate in the process. Their most important duty is to try to structure the terms of the deal and the transaction so that they work for you. If you don't have a whole lot of cash on hand and you need closing assistance for the seller, or if you do have the ability to make a stronger offer, maybe because you have more cash on hand and you need to get a shorter timeline or a longer closing timeline, then an agent can assist you with all of those things. When it's time to make the offer, the most valuable skill that the agent provides is they're able to reach into the system, the multiple listing system, and actually get most recent or the most recent sales information for the area where you're going to purchase in. They're able to advise you on perhaps the best price for you to offer, the closing dates that the seller is anticipating, the types of financing that other buyers may be coming to the table with, or that most likely able to come to the table with, the amount of closing assistance that the average buyer assessed, if any, and a number of other items. All of those things go to making your offer the strongest offer in the eyes of the seller and helping you make the best offer as far as your finances and your financial strengths, as well as your financial considerations. Your agent should be able to explain the offer process to you as well. What happens after you make the offer? What happens if the seller doesn't accept your offer immediately or counters? And also how often or what should happen if your offer per se should be rejected. They also detail what to expect in a multi-offer situation. Perhaps you're competing against more than one person. How best do you prepare for that situation? How do you make sure that you don't overpay for a property, as well as offer more than you really want in the process because you're getting caught up in a bidding frenzy? Your agent can assist with those things. And then last but not least, the agent interfaces with your loan officer to confirm your loan details, the property condition requirements, the closing assistance that you're permitted to use, as well as the rules for the closing assistance use, as well as the settlement timeline when you're actually lining up to make your offer. And that's just the beginning. So since we talked about offers, I want to talk about exactly what constitutes a strong offer. So if you're a first-time home buyer or even a move-up buyer, cash is king. If you have the ability to pay cash, then of course that's going to be the strongest offer that you can make. That is not the condition for the vast majority of buyers who are out there. So what are they looking for if you're a first-time buyer? And I want to stress that it can be any combination of these things that you're able to provide. You don't have to have all of them, but these are just the things that you can pick from to make your offer strongest. Of course, if you have a strong lender letter, everyone in this area knows Johns Hopkins. Their reputation precedes them. If you come forward with a letter from Johns Hopkins Federal Credit Union, it carries a lot of weight. Large down payment, if you're able to do it. Conventional loans are considered stronger, just as Betty had said. If you're coming to the table with a conventional loan, a lot of sellers can favor that because that immediately says that you have a higher credit score and that you're a strong buyer from the outset. Larger than normal earnest money deposits. Typically, a lot of buyers are going to make a 1% deposit. If you're in the position to make a 2% deposit or a 3% deposit and you feel comfortable with it with respect to the property, that may be something that might urge or push the seller to choose your offer. If you've been able to receive closing assistance from the Federal Home Loan Bank of Atlanta or any of the other purchase affinity programs or grant programs, and you can go without closing assistance, that also makes you a very strong buyer in the eyes of the seller. Many buyers will be asking for closing assistance. And if you're not asking for any, it could be a tremendous role as far as be a tremendous benefit to the seller to accept your offer. Also, swift home inspection contingencies, simple contracts, and limited repair requests during the home inspection negotiation. All of those things really stand to make a strong first-time buyer offer. For move-up buyers, again, cash, conventional loans are always a plus in the eyes of the seller. The ability to pay your closing costs, 10 to 20% down payment. It's nice if you have a chunk of money to put down from the sale of your own home. And then finally, if your current home is already sold or under contract, that is the ultimate strength if you're a move-up buyer. So what happens in the period from when you actually contracted for the property to actually closing? What can the agent offer as far as those benefits? And let's see the next slide, please. So the agent coordinates your home inspections. If you get a termite, radon, or lead or other inspections because you deem them appropriate for your property, the agent can also coordinate those. They assist with securing mandatory condo and homeowner association documents if you're purchasing in those communities. And they also assist you with the response timeline. If you read something in the documents that you don't care for, that makes the community or the housing a no-go for you, they'll help you make the necessary notifications to terminate the contract if that's what you want to do. They partner with you to coordinate the sale of your existing home. It can be an art and a science to actually line up all the qualifications necessary to sell your home and do it all within a timeline and at a price that works for you. For all those of you who are participating that are move-up buyers and you want to sell or even rent your home, the agent can help you come up with some realistic numbers for what that's going to look like. The agent also arranges for any sort of re-inspection of repairs. Say maybe the seller was required to service the HVAC unit, or maybe the seller was required to repair something that was plumbing related. It's a good idea to have those items re-inspected by your original home inspector, not just to go and accept the receipts that the seller provided as the work being done and being completed in a satisfactory manner. The agent works to schedule a pre-settlement walkthrough to confirm the property's condition immediately prior to your settlement. And then finally, they prepare you as the buyer for what to expect at the settlement table. What are you going to get? What's going to happen? How does the breakdown of your expenses work? That's the very last stage in the process before you become a new homeowner. And then the last thing that I really wanted to discuss is the relationship between Long and Foster and Johns Hopkins Federal Credit Union. As a member of the credit union and a hospital employee, or a member of the Johns Hopkins family, you are able to actually participate in the Smart Move Benefit Program, which offers a cash rebate to anyone who is participating. And that rebate is of the commission that the real estate brokerage would receive as a result of the sale. So for example, if you are selling a property that's $300,000 and there is being offered a 3% commission, 20% of that commission, or $1,800, would come back to you in a check form after you have settled the transaction. And that is a benefit that Long and Foster offers to members of the Johns Hopkins Federal Credit Union, as well as Hopkins employees. You can use the benefit as many times as you want. So let's say that you needed to sell a home and then 2 months later you're buying another home. You would get the rebate on both transactions. And a lot of people consider that to be an amazing benefit. If you choose to purchase an investment property next, of course, you would get the benefit again. They pair you with a top real estate agent in the area. There's a dedicated real estate and relocation coordinator if you're relocating out of the state. And of course, there is move management assistance. At the end of this presentation, there is going to be a brief QR code at the end next to my name. If you are interested in learning more about the Smart Moves program, a free home valuation, having me send you listings, scan the QR code and you can fill out the form, and I will reach out to you to make all of that happen. And I'd like to thank you for the opportunity to speak today. As always, it's been great to talk with and to communicate with the Hopkins family. Thank you.
Awesome. I feel like I learn so much every time we do these presentations from both Demetria and Betty. So thank you all for having me. Jeremy Hornberger. I'm a work-life program specialist in the Office of Benefits and Work Life at Johns Hopkins University. I oversee our Live Near Your Work program for university folks. We also have someone on the health system side now who processes applications for health system employees. So I'm just going to briefly go through just some basic requirements and information about the program so we can leave some time for questions at the end. So to be eligible for our grant program, you must be a full-time benefits eligible employee, which means you have to work a certain number of hours based on your affiliation in order to qualify to apply for the program. The second eligibility requirement, which has already been touched upon, is you must complete that home ownership course and counseling and have the signed certificate prior to applying for the grant. And finally, you have to be purchasing within one of our designated neighborhoods. You can see the map over there on the side. And that link right there on your screen is the link to our website, which contains a lot more detailed information about the program and additional requirements. So just to talk about the different boundaries and grant amounts, that purple outside line is the boundary line. So anything that falls within that is eligible for a Live Near Your Work grant from Johns Hopkins. The non-shaded areas are going to be that $5,000 grant amount. And each of these amounts includes the city grant of $2,500. This is an employer matching program, so we do partner with Baltimore City. The blue purple is our Hopkins campuses, our main campuses. You can see Homewood, Eastern, East Baltimore, Bayview, and I believe that's Keswick over at the top there, Mount Washington. And then the green, that is our highest grant amount, which is closest to our campuses, and that's going to be a $17,000 grant. So that's $14,500 from Hopkins, $2,500 from the city. And then the orange is just for university folks. It's a little bit higher because it's right near the university campuses in the Remington and Waverly neighborhoods. So that would be for $10,000, and health system folks would it would be the 5,000, just like the rest of the shaded areas. If a property falls outside of that purple boundary, unfortunately is not eligible for the grant. Now the program has expanded over the years and these boundaries have continued to grow. There's hopes that we will continue to expand as time goes on, but for right now, this is our boundary and is a strict boundary. So in talking about the grant amounts, again, it depends on where you're purchasing within the city. It's important to know that the Hopkins grant amount is actually taxed. It's an IRS regulation that Hopkins follows, and it's taxed at the supplemental rate. So your Hopkins net amount is going to be less than what the gross amount would be. The city grant is not taxed, so you can see when you add in the Hopkins net and the city grant, your total cash to close value is going to be significantly less than the amounts that I previously talked about. But I mean, it's still a lot of money that can be put towards the down payment and closing costs of a new home. Okay. And then just some contact information for the health system. You can see their HRSC is their service center for benefits. And then they also have a revamped website, My Benefits, JHFCU.com. And then on top there is my contact information. I oversee our work life email inbox. So anything that you send there, I will see if you have specific questions. The program is, the steps of the program essentially, once you realize you're an eligible employee and you have found a home, you want to complete that course and counseling session. And then you want to enter into a sales contract. So once you've made an offer and it's been accepted and you have a signed sales contract, that's when you're going to come to us to apply for this grant. And then we will send over the documents needed for you to then apply for the city portion of the grant. Hopkins grants are administered through direct deposit through payroll, so it makes it a lot easier. The city grant is a paper check that will be available 10 to 15 business days after you're approved by them, that your lender will need to pick up from their office. So we do recommend that you apply about 30 days in advance of your settlement if possible, because the funds can't be used retroactively. But again, any questions you have, there's a lot of information on our website and it walks you through all of the application steps, the different types of loans and everything else. But yeah, don't hesitate to reach out and email me. I'm happy to answer all your questions.
All right, well, thank you to our speakers. Betty or Jeremy or Demetria,
Yep.
do you see anything in the Q&A that you might want to share with the
Yeah, so someone asked if there's an additional benefit for live near work if more than one person in the household is working for Hopkins. That's a great question. It is only one grant per household. So it's one grant per address. So if you both work for Hopkins, since it's not income based, it's not based on salary, either one of you can apply as long as you're a full-time benefits eligible employee. But yeah, it is only one grant per household. And then I think Betty answered the other one, but the additional loans and grants and incentives that are available, I always send people to livebaltimore.com. They have a fantastic wealth of resources and information and all of the different grants that are available to home buyers in the city.
Okay, thank you. All right. I think we are good with the Q&A. And like I mentioned before, like you see on the slide, I would definitely take a picture of this. I mentioned in the beginning that I'm going to be sending these out to all the registrants and participants. And then when we have the video accessible, the link accessible, I will also include that in the email as well. So I think that is it. Thank you for attending. I know that you've gotten a lot out of it. And like I said, please feel free to reach out to any one of our speakers. And we will see you maybe in the future at the credit union. So thank you so much.